Hello everyone and welcome to the Thursday night edition of Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today. I'm the editor-in-chief of InsiderFinancial.com, and in this video we will cover today's market action and discuss our trading plan for tomorrow. But first, if you want our free alerts, click that link on the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com with your email. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our alerts, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, it'll be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever. No Discord rooms, no Telegram chat rooms whatsoever. With that out of the way, let's dive in here, folks. Well, today's market action was all about the inflation numbers. We had the CPI data at 8:30 a.m. Market participants are now pricing in just 2 more 25 basis point rate hikes by the Fed, which means that the market now anticipates that the Fed will soon change its outlook. However, my concern is that the market is playing a dangerous game, with inflation only coming down in select areas like energy and vehicle prices, while other areas like wages and housing remain major issues that the Fed will be forced to address to avoid possibly 1970s style inflation rebound. Right now, the market is priced in a lot. Any hawkish comments from the Fed or a reiteration of its outlook would be bad news for the bulls. According to the CME FedWatch tool, the markets now are pricing in a 96% probability of a 25 basis point rate hike at the next Fed meeting, compared to a 77% chance that was seen prior to the data release. Specifically, the headline CPI slowed to a 6.5% annual increase in the month, compared to 7.1% seen in the prior reading. The core figure, which excludes the volatile food and energy sectors, showed a 5.7% rise, exactly matching projections. So inflation is coming down, but it is still high historically. It was a good day for me as I traded TQQQ and SQQQ. Futures were bid higher prior to the opening bell, and as soon as the market opened, the market took a dump. So here is the open at 9:30. This is the SPY. This is the QQQ. This is the TQQQ, and then this is the SQQQ over here. I love days like today. Basically, with the futures bid higher, market opens, market goes negative, you get the panic selling in, market flushes, and then we got the dip buyers came in, and then you got the rebound. So I know some people may laugh, but this is my trading view setup. And the key here is, people will ask, well, why do you have all these charts up here? And it's to make sure that I'm only buying a green candle. I know it may sound simplistic and stupid, but I don't like buying red candles. You know what I mean? And sometimes, like, if I would get into, when I was trading futures on the S&P E-minis, you tend to start developing a bias. And, with this, I'm just focusing on what the market's doing, the price action. And, it just works for me. So again, it's been a lot of trial and error. I've been trading, almost 30 years, and it's what works for me. And I try and follow the KISS system, which is, keep things simple, stupid. But, what gets me is I look at my Twitter feed at the end of the day, and I can't believe how many Furus are tweeting throughout the day. Like, how the hell do you have time to be, tweeting all this? Like, when I'm in the market, I'm focused on, getting my trades off, putting stop losses in, putting in limit orders. I try to identify, where do I want to sell, where do I want to take profits, figuring all this out. sorry, I don't have time to tweet this. What I'm doing. It's just ridiculous that some of these guys are they can't be trading the market. That's all. That's my only conclusion. If you look at our Twitter feed, all our tweets are before the market open or after the market close. We never tweet intraday. Our alerts come out pre-market, before the opening bell. I have time to write them. I have time to put together a report, to do the research, so like for me, during the day it's trading, after the bell, it's about, preparing these videos, identifying, what we want to talk about. And, during the day, if I'm not trading, I walk away. I get up and leave. That means I see there's nothing to do, or I lost money that day. I'm not going to keep losing money, or I'm not going to try and make it back. It's for me, I like to trade the first hour and a half of the day, and the last hour and a half of the day. Other than that, during the day, you just get a lot of chop. I mean, look at this. Here, this is just the SPY, the 15-minute chart. So you had the opening dump, and then they came in and they bought the dip, brought it right back to where the market started, and then we just chopped around throughout the day. So again, there was just the trade was within the first hour. That's where I made my money, called it a day, and left. But moving on to some what we talked about in the videos last night. Look at the meme stocks. Today, this was a great day for the meme stocks that I covered in last night's video. Bed Bath & Beyond up 50%, Carvana up 46%, AMC up 2%, GameStop up 8%. Some idiot on Stock Twits said, I had no idea what I was talking about when I said in last night's video that the fundamentals are terrible for the meme stocks. Bed Bath & Beyond is on the verge of bankruptcy. Carvana, I mean, everyone got rug pulled by the Garcia father and son duo. I mean, look at this headline. This is back in September 16th. Carvana's CEO's dad goes on $3.6 billion stock selling spree, raising eyebrows. This article was September 16th. Oh shit, this was 2021. Oh, let's go back. We got to go back even further. This wasn't even last year. Let's go September 16th, 2021. Where was this stock? Sorry about this, guys. September 16th. Oh, it opened 20th. The stock was 322. I mean, this guy knew. He knew it was a house of cards. He knew to get out. And, if you were staying in and trying to, guys, follow the insiders. I mean, they know more than you do. And, I know that a lot of people try to overanalyze the market or whatever. Just keep it simple. Don't fall in love with any stock. Always be booking profits. Case in point, I've been talking about KEGS since the beginning of the year. January, you go over here, January 3rd, open at 0.00, trip zeros 0.004, ran all the way to, what we got here, 16 cents. Yeah, we got as high as 0.0016. 400% gains. I said in the video the other day, guys, I said, hey, we got this run. We got a red day. It's looking a little toppy. Again, I didn't trade it. I explained all that. Go watch my videos. I explained my strategy and everything. And I said, look, you got to either use a trailing stop or book profits because these plays run and then the play is over. You can't, these are not long-term holds. You want a long-term hold, go buy an ETF. I'm being honest with you. It'll save yourself a lot of headaches, compounding. You'll get the dividends. You'll make a lot more money in the long run. And you can look at a lot of the stories about a lot of people on Robinhood and what happened. Some people turned $5,000 into $150,000, and then they had tax bills and they gave it all back. They lost money and they didn't have money to pay their taxes. So again, guys, I'm not a financial advisor. I've been through a lot. I'm just trying to, share my experiences. take it with a grain of salt. If I don't know what I'm talking about, just say, fuck you, you don't know what you're talking about. Leave a comment and say that. I'll leave it up there. I don't care. I mean, I'm not, I have a thick skin, so I'm not going to, get all emotional like, oh, you called me a fucktard or whatever. But moving on, some penny stocks. So this was 3 penny stocks to watch Wednesday. 3. So what were they? HEPA, HOWL, EVGO. Well, how did they do on Thursday? HEPA up 31%, HOWL up 39%, EVGO up 9%. And again, guys, what are we covering here on this channel? We're covering day and swing trades. Day trades are defined as intraday trades, and swing trades are trades that can be overnight to a few days to a few weeks. And, I'm trying to, bring stocks to your attention through this video, through our alerts. We're putting it all on giving you reports, discussing them. It's your job to learn how to trade them. And, we're not going to hold your hand. I'm not a financial advisor. If you need that, go see a financial advisor. But a lot of these things about how to day trade, chart setups, opening ranges, they're all in the ebook. So, click that link in the description, sign up with your email, sign up with your mobile, you'll get the ebook, and it's completely free, guys. So, unsubscribe anytime, sign up, just get the ebook. It'll really help. I think it'll help you a lot in becoming a more successful investor. But again, not financial advice. All of this is educational, entertainment purposes only. And then last night, I had 2 stocks for you guys to watch today. KERN up 66%, XPON up 58%, and both green days. So again, however you trade it, they were both green today. You had plenty of opportunities to make money. Again, none of this is financial advice. But tomorrow, we have 2 short squeeze plays on deck. First up is Blue Apron Holdings, APRN, 49% of the float is short. And then SPCE, 20% of the float is short. News after the bell, got a lot of catalyst. The commercial service remains on track to launch in the second quarter, so that is indeed bullish. I think we can get a nice move in SPCE and APRN. APRN, very similar to Bed Bath & Beyond, very, very popular name, and I think we can really get a move here. So again, follow my videos, get the ebook, talks about opening ranges. I don't do the after hours trading pre-market. It's a lot of light volume. They can move it, very easily, like we saw today in the futures. They bid the futures up in the SPY, in the E-minis. Market opens, it dumps. It was just a great contrarian trade. It's you get a lot of that, a lot of pre-market action. It's a lot of noise, a lot of fluff. Market opens, real participants come in, and then you get the real moves. So again, sign up for the ebook. A lot of this is all this is talked in the ebook. Finally, guys, again, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Thanks for watching. Also, remember to smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.